Hello, everyone, and welcome to today's webinar, the latest digital real estate industry trends and their impact on your business. My name is Annie Triboletti, and I will be your moderator. Joining us today are Jim DeGaetano and Kevin Kinderman. Jim is the Director of Financial Services at CSC with a primary focus in electronic recording, or eRecording, and related real estate services. Jim oversees national accounts, strategic partnerships, and digital commerce activities. He also plays a key role in our product development and market growth initiatives, contributing significantly to the 270% growth of CSC's eRecording business since joining the company in 2012. Kevin is the Director of Sales for CSC's Real Estate Business Unit. Kevin is based in Wilmington, Delaware, and manages our nationwide eRecording efforts for government recording offices and document submitters. And with that, let's welcome Jim and Kevin.
Thank you, Annie.
Thank you, Annie. Thank you. This is Jim DeGaetano, and it is a pleasure for Kevin and I to be on the phone with everybody today. It's exciting this time that we're in the real estate and mortgage industry as the move towards digital transactions has really accelerated. Kevin and I go to a lot of conferences, and of course we've been involved in electronic recording for several years. So we do interact with quite a few of the industry players involved in this movement towards digital mortgage. And the industry has been great in several areas in working together to accelerate towards digital. So this morning we'll be talking about digital mortgages, and then as a subset, e-closing, e-notarization, and e-recording. And then we'll have a little time at the end for questions and answers.
Great, thanks, Jim. So we're going to give you a quick introduction on where CSC is today. CSC has been in business since 1899. We've been a leader for business, legal, and financial services worldwide. And today, CSC does business with 90% of the Fortune 500 companies. CSC's founders were two attorneys that were instrumental in the developing of the incorporation laws here in Delaware. We're a private corporation with over 2,500 employees, and we're in more than a dozen countries and in all 50 states. So a few more details about CSC and some of the solutions that we provide. As you'll see here on this slide, there's a list of various services that we offer. Our clients that work with us, they do so in a lot of different ways. We really help companies of all sizes sort of as a one-stop shop. You know, our company tagline is "We're the business behind the business." And you'll see here a variety of corporate compliance and governance services, financial services like UCC search and filings, our real estate services, but even digital brand services and domain name services. So,
thanks, Kevin. So folks may ask, what is a digital mortgage? And, you could start off by saying that the holy grail is where everything is digital, where you have an online application, digital loan processing, digital underwriting, and a completely digital electronic closing, including e-signing and e-notarization of deed and mortgage. And that is the holy grail, and it is reachable in some places, some scenarios. But a digital mortgage is also a mortgage that is largely digital, if not completely digital, and we'll talk about that more later. We are getting closer to getting to a fully digital mortgage, but there still are some challenges, particularly in the e-closing space. I think the industry would have gotten here a little faster had we not, sort of having to we went through the mortgage issues back in 2008. And then I think the focus shifted more towards working through foreclosures and compliance and, putting TRID in place and making sure that people were in compliance with TRID. But then as we worked through that, I think a big spark back towards digital was largely really that Rocket Mortgage Super Bowl ad, which really got people's attention on an online mortgage that was convenient for consumers. And I think that shifted attention and really catapulted things. It was a real spark. Home buyers want speed and convenience and security on their transactions. They can do so many transactions online today that the expectations or hopes are that they could do the same in the mortgage loan space. And, lenders have the same interests. They want speed, they want data accuracy, they want to be compliant, they want to reduce costs, and they want to be able to leverage data. So when we look at digital mortgage, we sort of break it down. It really begins with the realtor and the home buyer. And for a long time, we've seen property listings online, and we've seen companies like Zillow and Redfin, which are very popular with consumers. But then we move into real estate contracts, and I've actually had personal experience with this where my daughter bought a house recently, and we were actually with her, and we were busy that day doing a bunch of other things, but she had her phone with her, and she was able to sign a purchase agreement and also execute the earnest money deposit through this application called Loop, and there was a lot of communication between the realtor and the buyer and the seller and the other parties involved. And I was really, I had never seen it before, and I was really quite taken with how efficient that was, particularly that since we were doing other things that had nothing to do with her buying a house that day. But then you move into online loan applications, and there have been quite a few borrower portals that have been developed and are now available in the marketplace. And these portals are then integrated with the loan origination systems that the lenders use. So that's how you get the mortgage loan process started. And this means that you can now do loan disclosures electronically rather than sending out paper. That's very efficient. One of the biggest changes for me personally is seeing that there are now e-portals for income and asset verification, also property value. A long time ago, I was a mortgage originator, and I remember running down VOEs and VODs, pieces of paper. I'd have to drive to a loan applicant's place of employment and try to get a VOE signed, or I'd have to drive into the city of Chicago and pay $40 to park and try to go into a bank to get a VOD completed. Those days are going by the wayside. Now this can be done through data-driven engines. Loan underwriting has been around for a long time. Both Fannie and Freddie have had their desktop underwriter and loan prospector systems around for a long time, and those systems have just gotten better and better. Something that is newer, though, is electronic notes. This is something that has been pushed by the GSEs, and it's working with MERS, and an electronic note is accepted in all 50 states. Fannie and Freddie will accept electronic notes. The notes are registered in MERS e-registry, where they track the location of the note and also the controller of the note. And use of e-notes is growing rapidly. Quicken announced earlier this year that they were going to start using e-notes, as did Wells, and there's some investors out there like Mid-America who are very openly in the marketplace buying loans with e-notes, and we'll talk more about e-notes later on. But an e-note is a MISMO smart document. It can be e-signed in all 50 states, and it just has so many advantages for lenders and warehouse lenders in terms of better security, better control, better execution, because you can actually get the notes to the investors faster and hopefully get a better price on your loan execution. And then e-closings, which we're going to talk about more. We said there's hurdles that still exist. There's different versions or ways you can do an e-closing, and we'll explore that more. But those hurdles are being sort of knocked down one by one, and we'll explore that later, more later. Kevin, why don't you share a little with us about e-recording here?
Yeah, sure. So e-recording has been the last mile of the real estate transaction, and it's really become much more popular within the last 5 to 10 years or so. But we're really seeing a more wide range adoption of the electronic recording process, and this is included in the topic when we talk about digital mortgage processes. The electronic recording process is just the last piece of it. Some statistics today, there is counties within 47 states now that have implemented electronic recording. And overall, county offices, we've seen them report greater than 80% recording rates in documents that are submitted electronically versus paper through mail or courier. And we'll review more about how e-recording's matured over the last decade a little bit later in the presentation. But I do want to note that part of the adoption and sort of broad acceptance of e-recording has come through the CFPB endorsing e-recording, and then we've even seen ALTA, the American Land Title Association, they've listed e-recording as one of their 7 pillars of best practices. So we've seen some industry associations and key players support electronic recording that way. And then finally, electronic signatures. We know that eSign was passed in a federal act in the year 2000. It basically made electronic signatures valid and enforceable, that if the parties agreed to sign it electronically, that there was federal legislation in place that made that basically of the same validity as a signature that was done in wet ink. So, Jim, tell us a little bit more about more of these, I guess, shifts and how the industry is becoming a bit more data-driven from where it's been in the past.
Sure. Yeah, really the industry is changing from a document-oriented industry to a data-driven industry. There's so many ways for lenders to utilize and leverage data that they previously used to use documents for. So this is a good thing because the average loan file is around 500 pages or pieces of paper, and this is cumbersome. And there's many parties involved in a mortgage loan, so there's a lack of control. And when you're working with paper amongst all these parties, and there's a high propensity for error. When you can move to data, you can work in a more controlled environment where there's auditability and transparency. And the lenders are able to do exception processing where, if there's something amiss in the data or there's something in the data processing that alerts them to an inconsistency, rather than working with paper where you would stare and compare to make sure that everything was appropriate. So this is really a good shift for the industry in terms of speed, convenience, but just making better quality loans. And Kevin, as we sort of touched on before, there's a lot of participants in the marketplace that are making this all happen.
Yeah, and this has been the most impressive thing to me. It's been enlightening too, because you see how many different parties are involved in a real estate transaction, and it requires so much coordination from each of these key market participants to embrace it, approve it, promote it, to give confidence to consumers, but also other participants that, hey, look, these are processes that we should be adopting, and they're going to be of value to all of us. Here listed first are GSEs, and this is Fannie and Freddie, and we know that They have a uniform closing disclosure data set that's been established, that they've approved specific, e-vendors or electronic vendors, and that they've broadly said, technology is something that we should implement more, and we support it. We're behind it. There's been almost a blitz of states over the last year or two that have adopted some new legislation which permits electronic notarization of some form, and we'll talk a little bit about that. But that's been happening at the same time. The National Association of Secretary of States, they've been sort of reacting to this, and that's likely where the legislation's getting kicked off to get these states positioned to accept electronic notarization of some form. MISMO is a association or organization that has established this data exchange standards, and that was necessary to make sure we had a means and sort of a rule book or a standard process to follow with all these different parties involved. And we've even seen PRIA, the Property Records Industry Association, or ESRA, that they're all promoting in their own ways to their own audiences and members that we want to promote and accept digital processes, that they provide a greater sense of security, they provide efficiencies, and they really benefit the consumer too. The last couple here, ALTA, American Land Title Association, and the Mortgage Bankers Association, same thing. I'd mentioned ALTA. They've made eRecording one of their best practices. I'm sure there's going to be more, if not instruction, kind of guidance or suggestions on how to adopt electronic or processes or embrace technology a bit more from them. Even MERS, the Mortgage Electronic Registration System, they've had a key role in all of this because they were the ones that developed the e-registry. And, through this process, they recognized, the controller and the location of these registered notes. And then even, vendors that participate in these processes like, CSC is an e-recording vendor, but even some of these e-vault companies that contain the copy of the e-note, like who are some we've seen around? Fiserv and DocMagic and eOriginal, even Pearson Patterson. They've all played a role in collecting, or the industry as a whole has collected all of these different participants, key sort of stakeholders, and work together. So my final thought is it's about time. We've been talking about this for so long, and it really is exciting. It's great to see progress being made, and now we can start to see some fully electronic and digital mortgages or digital mortgage transactions are happening today.
Right. So although there are so many things to work through, in some ways their work has been heroic. So,
yeah, it really has. Yeah, no, well said, Jim. I think that's the feeling I have too. It's been impressive and significant. And I'd mentioned before on the past slide some benefits really about the digital mortgage process, but specifically for customers or consumers, they love the convenience. I think it was eOriginal that shared an example on a webinar that they conducted a couple months ago, that there was a couple vacationing in France and their flight got canceled, but because of the available technology that they had, they were still able to conduct the closing through their phone. So kind of fascinating. I know for many of us in the industry that are seasoned and established, and we've been doing it a certain way for so long, there may even be an ounce of uncomfort with that thought, but we see a greater sense of security with these processes, and there's no doubt that it provides so much convenience with where and when certain things can happen in the transaction. Speed obviously is a benefit. Security is another, where every single action taken by any party within this transaction, if it's done through this electronic digital mortgage process, it's date and time stamped. every action. There's a log, there's an audit trail that captures anything that was done. So that's an element that we maybe hadn't had before, where you're just sending it out through, physical paper mail, or you're using a courier for the delivery piece of it. We haven't always had a fully transparent process, and I think security and transparency go hand in hand. And then obviously communication, really that works with speed as well. But so many things can be done online. There's no delay, and it allows the transaction to happen sooner, which is beneficial really to all parties, the suppliers of the services, but also the consumers, because buying a home may not take 3 months or 4 months anymore. It could be something that happens much, much faster. So, Jim, any thoughts just about benefits to the consumer, or maybe you can share some information about benefits to the suppliers of the services, like title companies or lenders?
Yeah, the same or like benefits accrue to both lenders and title companies when going digital. Number one, you can leverage data. There's data that can be leveraged that will help the processing of loans. So it eliminates paper. It can be more accurate. You don't have to worry about hand keying errors. It's faster, and then you can also generate data for downstream users. You generate data at the very beginning of the loan process through the application, and then it moves downstream even to the mortgage servicers once the loan is closed and delivered to the investors. So again, speed, faster loan processing. If you can process a loan in 30 days rather than 45 or 60 days, you can sell that loan into an earlier market and get a better price. It's easier to manage and hedge a mortgage pipeline. It's good for the guys doing secondary marketing who are selling these loans into the secondary market. Using digital processes, you have improved loan quality. Studies are showing that there's fewer errors, and this really reduces the amount of post-closing cleanup that lenders have to do when they're processing and closing loans digitally rather than in sort of traditional paper-based processes. And post-closing cleanup is a pretty big thing for most lenders. So if you can reduce that cost, that's a big cost savings for lenders. The studies are showing that doing digital mortgages reduces the cost of a mortgage anywhere from $220 to $400 per loan file. So that's pretty big savings, particularly when you consider that the cost of origination has gone up quite a bit over the last, say, 10 years due to increased compliance requirements. When you're doing business digitally, particularly if you're utilizing eNote, you're going to get a faster turn on your warehouse line, and this is going to reduce your warehouse costs. Again, every little bit of savings helps. We talked before about better loan execution. If you have electronic documents and you can get those documents to the investor faster, and you've been able to process and close your loan in a shorter amount of time than if you've been using paper, that means that you can sell into an earlier market and get a better execution. The next one is something that everybody in every business wants, and that's a happy customer. So good borrower experience. If you have borrowers that are pleased with the process all the way through due to the convenience and the speed, that's good, because then they come back to you to refinance, or when they buy a new house, they come back to you for their mortgage financing. Early adopters in the digital space will have a competitive edge over those that lag. It's consumers want speed and convenience, and they're doing so many online transactions that they are going to gravitate to mortgage lenders that can do digital mortgages. But just overall, it's, doing business digitally is a benefit to all parties, the lender, the buyer, the seller, the title agent, and the real estate agent. And, I think, again, going back to Quicken, when they've really been a leader in this space, first with their promotion of the Rocket Mortgage, and then earlier this year when they announced that they were going to begin doing, utilizing eNotes and doing e-closing where they can. I think that really got people's attention, and I think it moved the needle. I think the rest of the industry, or most of the industry, is now taking a serious look at improving their digital capability.
We're going to talk specifically about the types of e-closings. There's the traditional closing process, right, which has happened for decades. This can be done in any state. Obviously, it's done in person. The notarization is done in wet ink, and there's a traditional note, right? But as Jim mentioned, he even thinks that sort of a hybrid e-closing should still be considered electronic, which it is. This is happening more and more where the transaction is still conducted in person, but all non-notarized documents, they are electronic documents, and they are electronically signed documents. And then all notarized documents are still wet signed and notarized in person, right on the paper. But there is an e-note. There could be a traditional note, but this is where there's variations within the hybrid e-closing process. But there's still adoption of enough electronic processes where I hope we'd all agree, hey, look, this is a really solid step. This is maybe even the direction that all of us should be moving toward, at least right away. And then these second two over here on the right, I'm going to use some acronyms, and we're going to reference them throughout the presentation, the remainder of it. The first is IPEN, which is an in-person e-notarization. This is where the transaction's in person, it's face-to-face, but all the documents are electronic. They're all electronically signed. They're all electronically notarized. There's an electronic note, and the documents are electronically recorded. So although it happens in person, every piece of, I shouldn't say paper because there is none, every document and every action by the various parties, those things happen electronically. And again, that's the IPEN, the in-person e-notarization process. And then finally here you'll have we call it RON, remote online notarization. And it's probably fair to say that this is perhaps the more adopted process, at least as states put legislation in place to allow electronic notarization. So this is where the signing would occur remotely, but in real time, and that there's some sort of two-way AV or audio-video connection, right? A camera and some sort of speaker that you're able to communicate that way. The notary public, they would appear before the signer through that webcam, and then again, all of the documents, they're electronic documents. They may not take paper form, right? They're signed electronically, notarized electronically. Again, you have an electronic note, and then the last part of the process is they're electronically recorded. They never have to take any paper form. They never even have to go in the mail. They can be a fully digital document, all the way from the document creation to document execution into document recordation. So that's probably what will become the more common e-closing model, at least related to the notarization process. But hopefully that gives everyone a good sense of what the different types of closings are that we're seeing. So Jim, give us a little more info. We've got a map here, and I think you're going to talk with us about just which states have adopted legislation and which states are implementing this so far.
Right. The map does a good job of showing where you can do the different types of e-closing. And again, you can do the hybrid in all 50 states. But then we have some overlays here. Those in orange are where you can do the remote online notarization, which really started in Virginia. That was the first state to pass legislation for remote online notarization. And their laws allow their notaries to notarize a document outside of Virginia, both inside Virginia and any place else. And then Montana followed. Their initial law that passed restricted online notarization to just within the state. And then last year, both Texas and Nevada went live with their new laws allowing for remote online. They both went live July 1st. And then shortly thereafter, Stewart Title announced that they had done their first fully digital closing in Texas. So it's, I can't say that remote online notarization is sweeping Texas like in a big tidal wave, but it is being done, and it's growing slowly. I saw a report where the Texas Secretary of State reported that 132 Texas notaries had been designated or received designation as a remote online notary. Now, Texas is a huge state, so you could say it's a good start, but it's 132 is that number is going to grow quite a bit over the next few years. But then in the dark blue, we see those states that allow for in-person e-notarization or the IPEN. So there's quite a few states there. And then in the blue is where you've got the hybrid e-closing. I think the states in gray are interesting because those 5 states have passed remote online legislation, and in those 5 states, it will become effective next year in 2019. So moving on to the next slide, we're going to take a closer look at remote online notarization, or RON. Kevin, you want to move it to the next slide, please? Thanks. So it's interesting where it appears that remote online notarization could become mainstream. And we see here we've got the 4 states in red that where it's already been passed and where it's active. We see the 5 states in blue where it's going to become effective next year. But then we see the 15 states in dark blue where legislation has been introduced. Not passed, but introduced. So it's being, RON is being considered in 15 additional states. And so that indicates that there is momentum towards remote online notarization. And that's why many in the industry feel that it could become sort of the mainstream way to do notarization in the future. But, with those 5 states that are going to make it effective next year, I think in the latter part of 2019 and in 2020, we will see a sharp increase in RON closed loans in the industry. So moving on to the next slide, there's a lot of things to consider when you are looking at doing e-closed loans. There's multiple parties involved. You have to look at, if you're the lender, can you do this? You have to put things in place so that you can do business digitally. Then you have to look at the title underwriter. Will the title underwriter issue a title policy on an e-notarized loan or an e-closed loan? And then you have to look at your investor. Will that investor accept an e-closed loan? And then you have to look at the GSEs and also the state law in the county in which the transaction is being done. As we stated before, Fannie and Freddie accept e-notes in all 50 states. they accept e-notarized loans in 22 states. And this is a fluid number. These numbers are changing all the time. So, this is a snapshot in time. Ginnie Mae is publishing a 2020 plan supporting digital, so that they're going to get, in the game in the near future. And the Federal Home Loan Bank is exploring digital. Right now, Stewart Title will insure title on RON loans in several states, provided it's in a county that eRecords. And Westcor has really been sort of out in front amongst the title underwriters. They'll insure title on RON loans in 29 states, provided that it's in a county that eRecords. All the other title underwriters are actively reviewing, e-closings and eNotarization. And I'm sure we'll see their numbers and their acceptance pick up as well in the very near future.